Hey there, this is Alex Kluge. I'm here from Toronto Home Experts, and I'm here to dive into the September 2022 Toronto real estate market update. Okay, so if anyone who's been following these videos knows that September, I've been saying September is a really key month in seeing where we are in the market. It's a really good snapshot of what to expect this fall and heading into the winter. We saw very slow sales volume wise this summer, so it was really not very telling in terms of like what's happening. I don't like to put too much weight into summer data, but September is a really key month. So I'm super excited to look at these numbers with you today and see what we can extract from them and what to expect moving forward this fall. Okay, so sales volume. We're now comparing September 2021 to 2022, and unsurprisingly, we're down. I mean, September 2021 was a record month. That was the best September sales volume wise, and September 2022 was the lowest we've had on record since being recorded in 2002. So, what does this mean? Well, I think there's a combination of things. I don't think there's a ton of inventory. I think that's a part of it, and we'll get to the active listings and new listings shortly. There's also not the surge of new listings that perhaps buyers were expecting in the fall. The rental market is a big proponent of that, or because rental market is so hot, as we discussed last month. Condos and freeholds are renting at record prices in Toronto and throughout the GTA. So that's taking some pressure off new listings. Because what I'm seeing firsthand is clients or would-be sellers are choosing to rent their properties out instead of selling them when they say, well, okay, like average prices are down 18% or whatever the number is for their, particular pocket. Why should I sell now? I don't need to sell now. I'm going to rent it out because I can get significantly greater rent that I would have even last year. So it makes financial sense for a lot of people to take their properties and put them for rent. So obviously that's not everyone, but what we're seeing is, I don't see that there's a surge or a ton of great listings on the market. So that is something that I think was a factor in September. I think certainly what I'm seeing is that we had buyers waiting for new listings to come out, and there wasn't a lot of great inventory. So that is contributing to why we're seeing sales volume as low as we are. But, despite this extremely low month of September, I do expect this to continue this fall. Like, I do expect us to see low sales volume numbers. And even with those really so low sales volume numbers, we're probably still going to land for the whole year, probably still going to land somewhere in and around the 2018 sales volume numbers, right? So, what does that tell you? We were extremely active at the beginning of the year, and then really second half of the year looks like it's slow from a volume perspective. So we're going to track that number closely because that'll be super interesting. We're certainly not expecting to see another record year like we did in 2021. So that's, we have to take that into context, right? Okay, so active listings. So active listings relative to last year. Again, last year was an unbelievably active real estate market, and a lot of the active listings were getting absorbed. We are seeing an increase. So like, don't look at this and say, wow, there's like a surge of, active listings. This is worrisome. Yes, what this does show is, in this type of market, when we're having sales volume as low in the 5,000 range, and we're getting active listings in the 13,000 range. This would indicate that we're probably not in a strong appreciating market, right? Probably means we're likely flatlining, maybe going down a little bit, or maybe going up a little bit. But we're seeing a lot more balance, which is actually what we're seeing. So I don't put too much weight into this number just yet. If we're seeing that number climb significantly, and then we're seeing sale volume, stay at these low levels, that's when we expect further price declines. But we're actually not quite seeing it, and I'm going to talk about that in a moment. Okay, so new listings. This is kind of what I was talking about in my earlier slide. New listings are down 16%. So they're 11,000, which is actually really low. And that, tells me that Again, there's not a surge of new sellers coming on the market. It's not as dire as perhaps the newspapers or mainstream media may be suggesting that the market's in. Yeah, obviously it's not a seller's market like we've had the last number of years, but this is saying to me that there aren't distressed sellers. There's not a surge of new listings. And so, this is behavior of what I would call like a flat-ish market, right? So, anyway, so just context. When we're looking at these numbers, we want to understand how it looks in the bigger picture as opposed to looking at micro numbers for a specific month. Okay, so average price. Here's where it gets super interesting. Okay, so this is the first negative average price we've had since in the last year, right? Because we were looking at September to September, and we saw such a huge run up in prices earlier this year. Whenever we were comparing, it was always up. We're like, oh, the market's up. Average prices are up, relative to last year. Again, you have to look at the snapshot of when you're comparing it to. And this is not surprising, right? Because we saw a huge run up in prices in September 2021. And in 2022, we didn't see that same surge. And what's interesting too to look at is since this has been recorded, these average prices for TREB, since it started in 2002, every August to September, we've seen an average price increase, right? So that makes sense. August is typically one of the slower months of the year. A lot of people are on holidays. New listings are lower. People are waiting for the fall market because that's typically the second best market to buy in if you're a buyer because there's increase in inventory. So it's not surprising that we usually see a price increase from August to September. So what's key about this is when we're looking at average prices, we're looking at month over month. We actually saw an increase for the second consecutive month from August to September, right? So if you look at this chart here, we had a huge run up, right? First 2 months, like 14.7% is absolutely mind-boggling when it comes to average sale prices. But we saw a steady decline. Like really, March was the peak. Call it second week of March or whatever, and then we saw a steady decline and a pretty sharp decline in July and June as well. So, but what's encouraging about this is I do think we've reached a plateau of sorts. We saw a slight increase in August, and then another slight increase in September. What does this mean? Like, I think we're probably going to stay, somewhat flat this fall market, probably through October and November. And probably once December rolls around, we're going to see, a slight decline then. Again, it depends. Like, we're living in a very interesting time macroeconomically. Like, inflation is at extremely high and concerning levels. Our interest rates for variable and fixed have increased exponentially since the beginning of the year. So that's obviously putting some pressure downwards on real estate prices, right? Because essentially what people are doing is, they're buying a mortgage payment. That's basically what they're doing. They're saying, I can afford X a month for my mortgage payment. What does that get me in terms of a purchase price? So whether the rates are 5% or 3%, that determines really a buyer's budget, right? So obviously the higher the rates, and we're probably going to see continued rate increases, this fall. So again, this is going to put a little bit of a cap on mortgage payments for new buyers. So what we're seeing is if you're in the market and you have a mortgage that is still ongoing for another 2-3 years, i.e., you have an expiry, mortgage term expiry sometime in 2024, 2025, and it's a fixed rate, you probably don't want to break that mortgage, right? Like, you want to probably port it, or just wait until the end of the mortgage term and then see where rates are at, which hopefully at that point we're going to see a little bit more of a normalization when it comes to mortgage rates. But again, we'll see. There's super interesting times right now macroeconomically, so it's really hard to predict where we're going to be in 2 years' time. But right now, I think this is a fair point when it comes to looking at real estate prices here in Toronto and what that means for the next few months. This is certainly an encouraging sign that we're not continue to see, further declines for the last 2 months. But anyways, October, November, expect more of the same. And then again, December, a little bit of a slowdown. So days on market, unsurprisingly, we're up, right? I mean, like when you're comparing 14 to 23, like 9 days isn't really a huge deal. But when you're talking about these numbers in a percentage term, yeah, like 64% obviously looks really bad. But, 23 days in the days on market in context of the grand scheme of things, looking back to, more, even though these were sellers markets, are more in line with, 2015, 2016 numbers, right? So anyway, so not huge concern. Like if we were in the 40s or 50s, okay, that's going to be a little more of a troublesome real estate market for sellers. But again, I think this presents more of a balanced market. Okay, hopefully you enjoyed this month's video. Like, I think there was a lot to take in here. We're loving the questions that we're getting, so please continue to send them. And again, if you're looking to see how this impacts you, whether you're a buyer looking to get into the market or upsize, or even if you're looking to sell and see what happens in your specific neighborhood and how these mortgage rates and economic changes are going on are affecting you and your projected sale price of your property. So please do not hesitate to reach out. Thanks again for watching, and we'll see you next month.